Hello everyone and welcome to Insider Financial Talk Stocks. My name is Alex Carlson. I will be your host today, the editor-in-chief of InsiderFinancial.com, and in this video we will recap last week's market action and discuss our game plan for this week. But first up, to get our market moving reports on top small caps, click that link in the description or go to signup.insiderfinancial.com or sign up with your email on any of the pop-ups on InsiderFinancial.com. After you sign up with your email, you can then sign up with your mobile number. Mobile is the fastest way to get all of our reports, and it works for all numbers worldwide. Simply enter your country code first, followed by your number. For US and Canada, it'll be 1 plus area code and number. Never begin the format with 0. It will not work. And after you sign up, you will get a welcome email, which includes a free copy of the Insider Financial Guide to Penny Stocks ebook. Our ebook, our email service, and our text messaging services are all free services from InsiderFinancial.com. We do not run any paid subscription service whatsoever, no Discord rooms or Telegram chat groups. With that out of the way, let's dive in here, folks. Well, the S&P 500 on Friday ended the week 1.4% higher, posting gains in 4 out of 5 sessions as fears over the banking sector and hopes of the Federal Reserve pausing rate hikes lingered. The Fed cut rates on Wednesday by 25 basis points as expected and ruled out rate cuts this year. However, Fed funds futures data showed a 31.2% chance of a quarter-point rate hike in June and 48.1% chance in July. According to Barclays, they said, we expect the FOMC to hike another 25 basis points to 5% to 5.25% in May, then expected to pause and maintain this range through the rest of the year. Powell made clear that a tightening in lending standards, which causes GDP growth to slow and labor demand to weaken, stands in for additional rate hikes. The week saw new developments in the banking space that fawned uncertainty over the stability of lenders, both big and small. Deutsche Bank's cost of default insurance spiked, while struggling Credit Suisse was forced to merge with larger rival UBS for $3.25 billion. Meanwhile, concerns about U.S. regional banks lingered. Turning to the week's economic data, initial jobless claims unexpectedly fell and new home sales increased less than expected, but existing home sales blew past estimates. Durable goods orders dropped and the U.S. flash PMI composite unexpectedly strengthened in the month. Economic data this week includes on Tuesday we have consumer confidence, Wednesday pending home sales, Thursday GDP, and Friday core PCE inflation. Among penny stocks that we are watching this week, first up, TRKA. There is just a lot of FinTwit buzz about TRKA, and as I've been talking about this one, 20 cents is the key support. Above 20 cents is an area you want to be long. That is bullish. Again, none of this is financial advice, but according to the buzz on FinTwit is market makers screwed up and misinterpreted the last filing with the Series E shares. They never hit the market. The market cap remained at around 67 million. So they loaned short shares based on the 344 million, which put the shorts in a bad spot. Jefferies is now going to buy back the E shares and they won't hit the market. Shorts will need to cover a massive amount of shares due to this. If this is accurate, buckle in. Next week, there should be a PR of the E shares buyback. Hold your positions. This is not financial advice, nor is it confirmed 100%, but it certainly would explain the activity of the past week and a half. Good luck to all. Our sentiments exactly. DBGI, there is a new article from analyst Mike Long on InsiderFinancial.com. I will leave a link in the description so that you can read all about digital brands, going private, a failure to read. And this is a must read. We highly recommend you go and read this on DBGI. As he says here, has been beaten and battered to an unthinkable market cap by the shorts and represents one of the cheapest and most undervalued NASDAQ stocks. It sports a $6.5 million market cap and it is expected to be profitable with $50 million plus in revenues this year. The stock has the potential to eclipse The move, Metamaterials Preferred Shares MMTLP, made late last year on an epic short squeeze. He says here, will investors continue to have poor eyesight with respect to this undervalued darling? So he goes into details, explains why he sees DBGI as an undervalued play with massive short squeeze potential. So again, this is a must read if you like short squeezes or you are in DBGI. But as I've been talking about in terms of the short squeeze plays, the overall market needs to get hot. It just gives a lot more room for these short squeeze plays to run. In this market right now, you know, if you can get 10%, 20%, 30%, God forbid, you know, if you get 100%, you know, thank your lucky stars. But that's about all you're going to get in this market. You know, if you're seeing anyone talking about, you know, 2x, 3x, 5x, 10x, 5,000%, that's just not happening in this market. This is a very choppy market. This is a trader's market. You want to be, you know, it's a lot of singles and doubles. Don't be going looking for that home run or grand slam. Again, none of this is financial advice. Next up is HLBZ, the CEO on Twitter, Salvatore Palella. He said next week is going to be a fun ride. And a nasty MF Bull, he said, so dilution is fun. And the CEO responded, I love stupid tweets like this. So certainly, you know, I'm not going to get into whether or not this is legal or not. I don't know how the SEC is going to look at this, but you know, guys, I talk about pump and dumps here on this channel. Play the pump. Don't be there for the dump. Don't be a bag holder. You know, if you think about it, you know, as I said, you know, the entire stock market is a pump and dump. You know, it's all about keeping prices high and you know, telling a narrative. You know, Kramer, CNBC, you know, even Buffett is guilty of it. You know, they all want to keep, everyone's talking their book. So you know, just always keep that in mind when you're looking at plays. Next up is GTII. I really like this chart. It's just slowly creeping up the charts. Again, that's because, you know, this is not a you know, this is not a market like last year in terms of short squeezes. It's just a very choppy market, but they are accumulating. There's a lot of longs in GTII, and I think the shorts are starting to get nervous in GTII. GTII has a lot of litigation out. They're suing, you know, market makers. They're really going after the naked shorts. So again, you know, if you are, you know, in these plays, GTII is the leader. And speaking of which, you know, a lot of people are talking about, you know, once GTII does its thing, I could see many of us coming to squeeze FNGR, but for now, full throttle GTII. So again, you know, hey, I'm short killer. You know, this guy, he's been all over talking about naked shorts. GTII, FNGR, you know, he's all over a lot of these plays. So certainly keep your eye this week. If the market gets hot, we could see a lot of these plays start squeezing. Next up is BRDS. Almost 11% of the float is short. We got insider buying at 13 cents. And then you got this tweet here, you know, BRDS, you know, 14 cents. Beauty chart, expansion news today. Insiders loading, huge volume morning. Pennies are hot. And yes, the volume has been very strong lately in BRDS. You see here, this is the most volume we have seen all year. So again, you know, higher lows. Got a red candle here, but this was a breakout. This is just some profit taking came in. Certainly we'll be watching BRDS going forward this week. Next up, guys, is SI. Wow, what a move on Friday. Closed up 52%. Earlier this month, analysts at Wedbush estimated that Silvergate has a liquidation value of $5 per share. 82% of the float is short, and Silvergate is not only a crypto bank but has great technology. The bank ran a real-time payments network that allowed multiple parties on the network to clear and settle US dollar transactions in real time. This helped facilitate crypto trading and crypto-related transactions because the US banking system largely operates on a lag, that the company may be able to sell some of its technology assets like its payment network and the deemed stablecoin technology that it purchased from Meta platforms. And, you know, if SI can bounce, certainly Bed Bath & Beyond can. Right here under 82 cents, 72% of the float is short. Chart has just been just absolutely, you know, a bleeding lower here. I don't know what people think of Scott Galloway. If you like him, if you don't like him, leave a comment below. He's a very controversial figure. I do listen to his pod. He really comes across as a pompous ass. He does know some stuff. He's made some money. You know, I have mixed feelings on him. But it was interesting. One of his trades a few weeks ago was he sold options on Bed Bath & Beyond, and he said that it would not go below 250. And here we are at 82 cents. Scott is a pretty smart guy. He's a professor at NYU. We're here at 82 cents. You know, he made a bad call, but you know, a lot of times when it comes, you know, when you're trading options, you know, his timing was just off, and you know, the reality is, you know, it just went lower than he thought. But I think that there's still value in Bed Bath & Beyond. You know, if Silvergate has value, I think there's value in Bed Bath & Beyond. This has just been beaten up too much. So I think that you know, let's see how the market is. But this could be really setting up for a nice relief rally. And Bed Bath & Beyond, again, a lot of the apes are in this one. So once it gets going, can really get the short squeezing and also a lot of longs adding to their positions. So certainly keep your eye on Bed Bath & Beyond this week. Lastly, guys, is ABML. As I've said, I've covered this one ad nauseum here at insiderfinancial.com. If this one was on NASDAQ or NYSE, this would be $5 already. You know, they have their recycling plant in Nevada. Operational mining is due in 2025. The recycling plant should be operational next year. We're waiting on some firm dates for the commercial scaling of these two businesses and some third-party evidence for, you know, and supporting details. But you know, we're waiting for some more concrete information, and we will be updating everyone on ABML. But overall, you know, everything that I've done research on it, I feel their large lithium reserves and their battery recycling technology makes them a very, very attractive buyout target. I think this will be, you know, it's not a question of if, but I think it's a question of when it's going to happen. I think there's a lot of value. There's a lot of technology here. And, you know, with their extraction technology, that's where everything is heading. And their, you know, Tonopah Flats property is the largest lithium deposit in North America. Just, you know, they have tremendous assets, and, you know, I see them as being very, very undervalued here. And, you know, going forward, the lithium battery recycling, you know, this will be a huge, huge business. You know, there are at least 7 smaller companies targeting this in the U.S. I think ABML is the leader in this. There's also LICY, but I like ABML better. You know, and if you look at it, primarily not just because, as I said earlier, because of their battery extraction technology, but really it's their Tonopah Flats lithium deposit. I mean, this is just, you know, the largest known lithium deposit in the U.S. You know, just increased the overall value of ABML. The U.S. government is behind ABML. They have awarded the company significant grants for its recycling facility and mining operation. I think tune of almost $200 million, just waiting for, you know, that money to hit their account and go forward. So there's a lot of catalysts with ABML. Keep it on your radar screen. You know, none of this is financial advice. I'm not telling you to go out to buy any of these stocks. I'm giving you plays. put on your radar screen, learn to use opening range, sign up. Click that link in the description or go to signup.insiderfinancial.com or sign up on any of the pop-ups on insiderfinancial.com. This way you can get the free Insider Financial Guide to Penny Stocks ebook. This talks about opening range. This talks about a lot of the strategies when it comes to becoming a successful penny stock and small cap investor. So there's a lot of useful information in there. And again, it's completely free, guys. And you also, by signing up, you get our in-depth research on undiscovered penny stocks with major upside. And the only way, as I said, to get our reports is to sign up. We've been delivering bangers for our subscribers, and by signing up, you can even sign up and unsubscribe if you want. If you don't want your email or your inbox, because we only send out our best ideas, so we're not going to flood your inbox with spam or anything like that. But you can sign up just to see the level of research that we do here at insiderfinancial.com. And finally, Insider Financial and myself are not investment advisors. This video does not provide investment advice. Always do your own research, make your own investment decisions, or consult with your nearest financial advisor. This video is not a solicitation or recommendation to buy, sell, or hold securities. This video is our opinions meant for informational and educational purposes only and does not provide investment advice. Past performance is not indicative of future performance. Thanks for watching. Also, smash that like button and hit the notification bell to be notified when a new video is uploaded. Good luck, guys. Bye-bye.